Hey Phoenix and Scottsdale, I'm Jessica. I'm a realtor here in Phoenix, and I know the headlines are crazy about what is going on in the market. Everything says the market's crashing, this and that. So I wanted to sit down and really just take a few minutes to dive into some data points and talk about what's really happening. All right, so here we go. The first thing that's on everyone's mind and what's really affecting the market is interest rates. As you know, the Fed is going to keep raising them until they curb inflation. They're raising them, inflation levels have stayed about the same, so we expect it to continue. As far as rates go, experts think that through the end of the year they'll remain high and might even keep continuing up. A lot of experts think that by next year, once inflation kind of stabilizes, that they'll start to go back down and then we'll end up in the 4 to 5% range. Right now, we're hovering around 6.5, 7. So what are buyers doing right now to kind of combat the higher rates and still be able to have affordable payments? We're seeing a lot of what's called a 2-1 buydown. This is a program that lenders offer. It does have to be seller paid. So this would be a seller paid concession. What it means is for year one of the loan, your rate is 2% lower than what your actual rate is. Year two, your rate is 1% lower than your actual rate. So that's where the 2-1 comes from. And then on year three, you'll have the actual rate that you've signed up for, which if you lock in now is probably going to be in the 6s. I have clients doing this. A lot of lenders that I know are doing this for their clients because experts think that rates are going to go down in the next couple of years. If they don't, then you'll end up with that full size payment. So because homes are sitting on the market for longer, it's around 40 days on market right now before an accepted contract, buyers are able to get seller paid closing costs a lot more. That's really something that we hadn't seen the last 2 years because there's so many buyers and so little homes for sale. Now, in most parts of the valley, we're actually in a balanced market. Homes are sitting longer and sellers are ready, able, and willing to pay some of those concessions so that buyers can use it to either do a 2-1 buy down or to buy down their rate permanently or to cover their closing costs. And the last option would be as a price reduction. Another point I wanted to make is that according to the data, and this is all from the Cromford report, the amount of new homes hitting the market surged the past few months when rates shot up. What I think happened is that people kind of panicked and thought, I thought I was going to sell, at the top of the market and kind of panicking. And so everybody started listing their homes for sale and for rent. So we saw a big surge in both of those. But now the rate of new listings hitting the market has significantly slowed. If rates shoot up even higher, that will probably change and we'll see more hit the market. What we're seeing that's counterbalancing the kind of fire sale of listings is your normal family living in a home that's their only residence and they want to sell and move into something else that'll work better for them, but they're not going to do it. And why they're not doing it is because rates are so high. Most everybody refinanced in the last 2 to 3 years, and their rates are between 2 and 3%. So if you think about it, why would you sell if you have such a low rate and then buy into something now with a rate at 6 or 7? It's just hard to make the numbers make sense. So I think that group of sellers are going to wait until rates go down lower and then buy something. Next, I want to talk about price per square foot. That's a measure that you'll hear a lot that we closely monitor. It gives us a good idea of what is happening with the market. So price per foot is going up, prices are going up, and then vice versa. So what I thought was interesting that I saw here is that the average price per square foot is now back down to the level that we saw in late February. It's still up 5.9% from the beginning of 2022. So prices are going down. However, they're still up for the year and they're not plummeting. They're going down, slowly but steadily. And it's kind of all dependent on rates. On September 15th, the pending listings for all areas and types was showing on average price per square foot of $301.78. So that's down 1.7% from the reading on August 15th. Another thing you're hearing a lot about is foreclosures, a fire sale of foreclosures hitting the market. So I pulled the data, and what we have here, we break down and categorize all the pending listings. We have 99.5% normal listings, and then 0.1% in REOs, that's lender-owned property that's not sold at foreclosure, and then 0.4% in pre-foreclosures. So the distressed segment of the market is tiny still. As far as supply and demand goes, we actually still have a low amount of supply compared to long-term averages. In certain markets, it definitely is excessive though. As far as buyers markets and sellers markets, most of the valley is now in what's called a balanced market between buyers and sellers, but there are some areas that moved into buyers markets first, and that are more strongly buyers markets. So those areas are more on the outskirts. I know in that category is Queen Creek and Santan. And then the areas that are like Phoenix, Scottsdale, especially Paradise Valley. Paradise Valley is still a seller's market. Those areas where there's less building and less new homes coming to market are more balanced. Another point that I thought was interesting about what's on the market is the total number of active listings without a contract has just exceeded 20,000. And that's the first time that we've broken through that number since March of 2017. So these are not record-breaking numbers. They're just very, very different from the absolute buyer frenzy that we've been in the last few years. That's why I keep comparing now to, what was the norm before, because I think it's really important not to just read the headlines. 20,000 is still below the long-term average, which is 25,000. So we still have a lot of space before I'd really be worried. While it is true that we no longer have a supply shortage, it's true that we don't have an excess of supply either, or at least when we examine the market as a whole. Things get a little bit more complicated when we look by price range. So I broke that down here. For a single family detached home priced between $350,000 and $400,000, we have 2,082 active listings. This is the highest count since January of 2008, so that's significant. So single family detached homes between 4 and 500, we have 4,456. This is actually a record-breaking number. Between 500 and 600, we have 2,510 active listings. This is the highest count since December of 2007. You're probably panicking. Those are really high active counts. And if we're setting new records like that, especially in the 400 to 500 segment, but what you really have to think about is before, there weren't that many homes in that price range. That wasn't the most common price range to buy in. But now it is, because the median sales price is so much higher. So now if we take that and we look at the active inventory count compared with the current sales rate, all of them are in a 3-month supply between 75 and 90 days. These supply statistics are high compared to the last several years, but not even above average from a long-term perspective. There's so much misinformation and fear-mongering happening in the market right now. So again, it's just really important to get the actual numbers out and the facts, along with the comparisons to what an actual normal market is. So to wrap that up, these price ranges are actually looking pretty normal from a supply and demand perspective over the long term. What we're really going to be seeing is prices fall for sellers that have either overpriced their home or not properly prepared it or aren't marketing it properly. Gone are the days of just listing something with crappy photos and just hoping that it's going to sell and that you're going to get 5 offers. Now it matters even way more who you hire. You need someone that's going to market it, take beautiful pictures, beautiful videos, and get the most eyes on the property. And really the most important thing is how you price it. If you price it high and you haven't also done these things, you're going to end up sitting on the market and lowering the price over and over and over again. As far as what the data supports and what the experts at the Cromford report have shared, the data really supports a correction and not a crash. And it wouldn't be surprising if come December 2022, we see prices that are pretty similar to what we saw at the end of December of last year. So let's go back to seller paid closing costs, otherwise known as concessions. Currently, 32% of sales have concessions going to buyers. As far as the outlook for buyers, I think for Q4, there's going to be a ton of opportunity for buyers that are not affected by interest rates. So buyers that are buying with cash, I think we're going to have more listings. We're going to have some buyers kind of give up looking over the holidays. And if rates go up, there's going to be even less competition. So I think if you are in that category, it's going to be a good time to pounce and find some good deals. Once 2023 gets started, it's a totally different story. Normally in January, a lot of buyers will pick back up. So we have seasonality, and then we have winter, which is obviously the best time here in Phoenix. We're hosting the Super Bowl this year. There's the Open coming up. I think a lot of people are going to get back into it and start buying, investors and people who are buying for their primary residence as well. I pulled some data I wanted to share with you, so I'll read it off. Percent of sales over asking price as of March of 2022, before rates went up, 54%. Percent of sales over asking price in September, 17%. So homes are still selling, and it's still possible to sell your home with multiple offers and over ask, but it has to be priced properly and prepared properly for sale. And then another thing I thought was interesting, sale price to list price ratio. So at 100% would mean that your sale sold at list price, and then higher means higher, and then lower means that you accepted an offer under list price. So as of March 22, the average was 101.5%, and then for September it was 97.6%. What we're going to go over now is called the Cromford Market Index. What it does is it has all of the major cities in the valley ranked top to bottom as far as what city has the most buyer demand all the way down to least buyer demand. And they're doing it by a ratio of supply and demand. Ranked number 1 is Paradise Valley, so they're very much still in a seller's market. I think part of the reason is because the prices are so high there, and you have a lot of cash, people coming in with cash, and so they're not affected as much by rates. Behind that, which also supports what I just said, number 2 is Fountain Hills, 3 Scottsdale, 4 Cave Creek, and 5 Phoenix. Now Phoenix is at 99.2, which basically means it's a balanced market. The other 4 above are all sellers markets still. So then if I read the bottom, the strongest buyers market, it's at 51.1 is Buckeye, followed by Queen Creek at 54.8, Maricopa at 62, Surprise at 74, and then Gilbert at 80. So those are all in buyers markets. Now we've talked about price reductions, rates, what's going on in the market, what's affecting those things. So something else that I thought was really interesting and a good point to talk about is once you are under contract, then what? And something really interesting is that we're seeing just about half of the contracts that are accepted are actually making it to the finish line. That is very, 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 very different than the market of the last 2 months. What I think is really causing that is a disconnect between the buyers driving the market and sellers who have not adjusted their expectations in the last 2 years. So the main reason that contracts cancel is something that's happening within the inspection period. So in the old market, if you even had your inspection and if you didn't have to agree before to not request any repairs, if things were coming up that the buyer figured, well, I really want this house, I'm just gonna kind of make do and I'll fix it later and hope it doesn't break. That's what was happening a lot. And now buyers are saying, no, we have more options. I can cancel and I can find, one of the other 4 great houses that I liked. And sellers are saying no. And so then they're gonna have to go back on the market again and probably be a little bit more agreeable to doing what the buyers are asking this go around once they've been on market, 60 or 90 days. Now, once buyers are under contract, what are the chances of getting to the finish line? I saw this data and I thought it was really, really interesting, and then I'll give you some color as to what I think is behind it. So it's roughly twice as hard to get a contract all the way through escrow as it was this time last year. If we look at this chart, new contracts versus back on market, you can see that 428 listings that were pending went back to the active status in the last week that started on October 2nd. This is about 6.5% of the listings under contract falling through and then being relisted each week. At the same time last year, we had 3.4% of contracts in escrow going back on the market each week. We also have a lot fewer listings under contract to start with, 6,593 compared with 10,894 this time last year. And so my thought on why they're falling back out is a disconnect between the buyers driving the market and sellers who have not yet adjusted their expectations. In the old market of 2 years ago, if you were even able to have an inspection and you didn't have to say that you wouldn't request any repairs, which is rare, buyers were having to do that one of two things a lot. Now they're able to have all of those things, and then once they find something that's wrong with the house, they want it fixed. And sellers are saying, nope, we're not going to do it, we'll find another buyer, because they have not yet adjusted their expectations to this new market. But buyers have. And buyers know, well, I saw 5 other homes that I like almost as much as this one, and they're all still available on the market. All right, if you kept watching, you must be really interested in the market. If you have any questions, give me a call or shoot me a DM. Follow me on Instagram. I'll put all of my contact information below. Again, I'm Jessica Sanchez, Phoenix Realtor. Thank you so much for watching.